Hello guys and welcome back to my finance assignment. I was continuing on. I found my answers for my missing purchases and missing net, which was €200 and €6,000. Let's take a look at my trading profit for Waldron Ltd. So here he is. So the credit sales is €420. The opening stock is €36,000. My purchases figure, which was missing, I found it in €230,000. My net purchases is €266,000, and then I have to minus that from the closing stock, which is €24,000, and then I get €242,000. So I have to minus this from the credit sales. My answer will be €178,000 for gross profit. Then I have to do the same right here for expenses of interest paid. I have to minus €102,000, and I get my operating net profit for the year of €76,000. They're very good so far. Now into my balance sheet. My current assets is €83,000, and my trade creditors of my current liabilities is €39,000. The current €712,000 is my fixed assets. And then it comes to 44,000 extra euros, and then I add these together and I get €756,000. Now my 6% debentures. I get €90,000 in ordinary shares. I haven't thought I was an issued figure. €800,000 and €680,000. I have to add these two together and I get €756,000 for capital employed. When it comes to the assets and liabilities of the tests, I have to divide these and I get 2.12, 2 dotted by 1, and my asset test will be €83,000 minus €24,000 is equals to €59,000. And then I have to divide this by €29,000, which is the current liabilities figure, trade creditors, and I get 1.51. 2 dotted 1 ideal position is 1.51. Point dot 2 dotted 1 or above. Now into my great breakdown of my current assets. €83,000. Well, let's make space for the page. Okay. So when it comes to €83,000 of the current assets figure, I use the debtors of €24,000, my closing stock, which was the €24,000, and my bank's figure, which was the €35,000 figure. I add these all together, my answer is €83,000, and that is my current asset figure that went into the balance sheet table. So that's my assets done. Now I have to do this section where I have to calculate the ratios and also explain them. So both calculating and explaining those ratio figures are 5 marks each, so a total of 10 marks for calculating and explaining those ratios. Which is the net margin and return on capital employed. The second ratio is the liquidity, which is the working capital ratio and the asset. Then my third ratio is my activity ratio, which comes to the debtors days and the creditors days. Fortunately, I don't have interest cover. Was not included in the assignment anymore because we chose to just do the debt and equity ratio instead, because it was an easier ratio to do, and that was a lot of work to be put on. So there's a good explanation and a good balance sheet table to do when analysing the debt and equity ratio. So now let's start off with the first part, is my net margin. I use percentage net profit multiply percentage divided by sales. So my €76,000 of net profit, divide that by €420,000 of credit sales, multiply 100% and I get 3.24%. That's an example of a net margin. Net profit multiply 100 divide sales by 1. Now my explanation. For every euro made in sales, only 3.24, or 3 cents or 3% is generated. It also means that every €1 in sales is €1.44 is cost of sales. The analysed of Y. Purchases figure of €230,000 seems quite low in relation to the sales figure of €420,000. It can reduce costs by purchases by looking for cheaper suppliers. You have to be careful of the quality of the stock products, and then discounts for bulk purchases with current suppliers. And then the note is often better to negotiate with current reliable suppliers. And then into sales, might raise your selling price, but this may be risky as customers might cheaper alternatives. Might offer existing customers discounts of sales and offers. It is a strong broadband and finding new customers is expensive in terms of marketing. I'll come to this. Analyze purchase figure. See above. Expenses of €102,000, which is the interest expense, is quite low in relation to sales of €242,000. Then interest expense is €102 is the largest single expense. How can we reduce the bill? Reduce overtime bill if there was one, reduce hours, outsource production, make redundancies. So that's net margin finished. Now it comes to the return on capital employed. So this is the calculation of return on capital employed. I have to use net profit plus or multiply interest, which is the expense. Divide that by capital employed. So €76,000 multiplied by €102. That answer, divide that by €756,000 and I get 10%. Now the explanation of the return on capital employed, ROCE, capital employed, is the total of the finance by section of the balance sheet. Every €1 of profit before interest and taxation is 10% or 10 cents. Return for investors. This should be considered when compared to the return investors could get from risk-free investments such as bank deposit rates. They could be considered to be profitable if the return on capital employed is greater than the returns from free investments. And then the investors will also analyze this from the perspective of the security of their current investment, and future investment opportunities. Now the second part of the ratios is the liquidity. This is the working capital employed. Explanation of working Okay, and then it stops right here, and this part is the calculation of the working capital ratio. Okay, now let's my explanation of the working capital ratio. So current asset test ratios in relation to liquidity and cash flow etc. How quickly assets can be converted into cash. The current assets is sets the goods and what owns and can be converted to cash and sales within 1 year. Examples of the current assets is banks, cash, stock, debtors and prepayments. Now they're into the current liabilities. Everything the company owes and must pay within 1 year. And the examples of the current liabilities is creditors, bank overdraft, VAT, PRSI, PAYE, USC and corporation tax. Then current assets is a ratio of at least 2.1 means a company should own at least twice what it owes within 1 year in the short term. Now into my calculation of the working capital ratio. C.A is the current assets and C.L is the current liabilities. So €90,000 and €75,000. I divide those together and I get 1.2 2.1. And that basically explains that current assets are bigger to own than current liabilities. And then extra information that is also included in the breakdown of the current assets is the closing stock. This ratio excludes the closing stock figure as it can take much longer to convert stock into cash to make a product to sell. That's more information about the working capital ratio. It can also be called a current ratio that goes from money in and from money out of the bank. And in business terms, it means cash flow. So now I'm going to go into the asset test ratio. It has current assets and current liabilities. €83,000 and €29,000. Divide down 0.12 2.1. And then it comes to the calculation of the asset test ratio. Okay, so I do as I explained before, I did all them. At the end, I done divisions. I get 1.5 2.1. Current assets from the stock and current liabilities. Ideally, it's above 1.5 2.1. That's my asset test ratio completed. Now into my activities, which is my debtor days and my creditor days. This is the explanation of debtor days. Stop right here, and then I'll update this in the next video and do my explanations and calculations about debtor days. So thank you all for watching and see you all soon. Adios.